Morning, everybody. How are we doing? Morning, Forex Fire. Morning, Danny, Vitali, Rodrigo. How are we all doing? Morning again, everybody. Everybody say morning again. Let me know if you're here so I know how many we got because I can't see. If you are watching on replay and you've got any questions, use the comment section down below, or you can come into the Discord group and ask the questions in the members section in there. And obviously, if you're here, you can just ask questions as we go. Morning, Noob. First time you've made it. He's here. Noob on a grind has arrived. Just grabbed a quick cup of tea. Back for the session. Now looking forward to this ADR session. Yes. Morning, Bill, Jules, FTNet, Harold. I can't keep up with the free and member sessions every morning. Well, I know. This is the trouble. There's a lot of content. There's a lot of stuff goes on in trading. I just realized, for those of you that were in the other stream, I've just found a bug I've just introduced. I'd made some amendments yesterday to the Swiss Army Knife EA. And remember, I got that profit curve that went up. I was a bit confused as to how that went up because I was using a 1R. And I realized I'd introduced a bug into it. So the purpose of my little thing that I did in the live stream was to prove that flipping a coin and just using a 1-to-1 risk reward ratio will give you somewhere around 49 to 51% strike rate, because over time the odds will even out. So it doesn't matter how you get in. If you get in by flipping a coin, some of them are going to win, some of them are going to lose, just by pure default luck, probability, distribution of trades. That's just what happens in that. So I've just fixed that bug quickly. Because basically I introduced into the Swiss Army Knife a martingale facility. Because I'm going to do a session on martingale, but probably we're going to look at hedging tomorrow. We're going to need to use martingale because most hedging strategies tend to use some kind of martingale. But I thought it'd be interesting to test some of these strategies with martingale as well, just to show what happens. And as we're doing ADR today, we could possibly test a martingale-based strategy for prop if they allow it. Yeah, so we'll have a look at that in a minute. But so today, basically, morning, Linus, is ADR. So AZ put in the members group last week or over the weekend about potentially looking at some ADR based strategies for prop, which is fine. ADR is a good strategy to use for prop. Yeah, so this session is basically about, we looked at prop in one of the other sessions, didn't we, on exit strategies for prop and how to, strategies for prop basically. So this is kind of a deviation on that, but using the existing strategy to try and use it for prop trading specifically. So I guess if we're going to use this for prop, the main thing we need to focus on is the rules for prop. So this is going to be quite a tricky session to come up with a single strategy that will work in prop, because every prop firm and they've all got slightly different variations on their rules. But there's two key types of prop firm out there. Ones that allow you to use EAs. That's meant to be a tick. And ones that allow you to use position trading strategies, stroke martingale strategies. Yeah. So first of all, if you're going to use an EA in prop, they need to allow EAs. So the first thing you got to do is find a prop firm that allows the use of EAs. If not, you're going to need to manually trade, which isn't particularly a problem. If you've got the ADR reversal dashboard, you can just use the dash, and then obviously you can take trades manually based on when you get alerts on the dashboard or the indicator. Yeah, dashboard's obviously better because it monitors everything. The other thing obviously is whether the firm allows position trading stroke martingale style strategies. So prop firms have two views on martingale. So some prop firms, if you went short and you add another short when you're in drawdown of the same size, yeah, they class that as martingale. Some prop firms class that as martingale. Yeah. I haven't used a very good example here. Yeah. So some prop firms class that as martingale. Some prop firms class that as martingale. Yeah, taking a slightly larger size, not double. Some prop firms class martingale as doubling the lot size. Yeah. So you got to look at the rules on individual firms as to what they allow and don't allow from a trading strategy perspective. Because the ADR reversal strategy, you can obviously just use a stop loss and a take profit. Yeah. So the exit strategy can be end of day exit. It can be an ADR target. It can be a propulsion gap. It can be used any exit strategy. But basically, when you get in on ADR, you can say, if it moves half an ADR against me, or a quarter of an ADR against me, or 1 hour ADR against me, I'm going to stop out the position. Yeah, so a single trade, every prop firm out there will allow you to do that, because you're just hitting a buy or a sell button with a fixed risk. That's not a problem. But as we know, it's more profitable not to use a hard stop loss, because the market is going to do all sorts of stuff after you press the button, but eventually it will go in your direction most of the time. It's a case of, if you put a stop there and it moves up to your stop and then goes down to your target, you lose. If you don't use the stop and it hits your target, you win. Simple as that, isn't it? Yeah. So some firms like CTI, for example, prop firms, they require you to use a hard stop loss. And that hard stop loss can be no more than X% of your account. So they might say, you've got to use a hard stop loss, and that risk cannot be greater than 1% of your account, in which case you can forget all of this stuff. You're not allowed to do it. Yeah. So it's a bit tricky to come up with a strategy using ADR for prop, because it depends which prop firm you're trading with. So we can look at multiple variations. Yeah. And we can try and find some that will work in all instances. Yeah. So initially I'm going to use the position trader EA for this, because obviously the position trader EA is built for ADR reversals, and obviously there's a lot of settings in there that we can use to fine tune the position trader EA to trade any strategy. So I've also got built into the Swiss Army knife a version of ADR reversals, because the Swiss Army knife obviously has a hell of a lot more exit strategies. We can get out after a number of candles, end of day. There's all sorts of stuff that we can do in here with trailing stops and things like that you can't do in the position trader EA, because the position trader EA is designed for position trading, not stop loss strategies. Yeah, that's the whole point of position trading. Is we know stop loss strategies are frustrating and difficult to make profitable. So we'll start off with the position trader EA. Yeah, so I'm going to go through, and you can do some of this testing yourself as well. Obviously, if you haven't got the position trader EA, you can get it if you want it, or you can just go and download the demo, because the demo works in the strategy tester, and all we're doing is testing here, aren't we, with testing theory. So with the position trader EA, obviously we've got the ADR reversal strategy set to true. Your risk, you can use percentage or amount of money. I prefer to use amount of money, because it's better to use a fixed amount every time you take a trade, rather than using a percentage of your account, because it skews results as your account grows. So if you have a massive losing run when you're taking your highest possible lot size because your account's grown, you're going to take bigger losses. Yeah. So using a fixed amount of money gives you a very gradual, steady equity curve. We covered all this in the strategy development streams at the beginning for robustness testing. So I'm going to set all these to 0. So single trade target. So let's first of all look at what ADR is as a strategy. So what we're looking at is price to have exceeded the average distance it does in a day. So ADR is average daily range, and ADR is measured from the low of the day upwards and the high of the day downwards. Yeah. So this line, as you can see right now, quite nicely, is ticking up. It's moving up because price is making new highs. So as price makes a new high on the day, this line will get dragged up. This low here of the day, that will remain static because we're measuring the average distance moved intraday. We're not using a pivot. It's not based on pivots. It's not saying on average this instrument moves 114 pips a day, so let's put a line 114 pips away from the open. We are talking about intraday movement, up and down. What is the maximum it moves from the high to the low, to the low to the high on a daily basis? Yeah, because if on average this thing moves 114 pips up and down in a day, and today it moves 114 pips up, that is pretty much what it normally does on a daily basis. So if it's going to do what it does on a daily basis, the average, it probably won't go much further. And this is where these percentages come from, isn't it? 42% of the time we go above ADR, which means that 58% of the time we stay within that range. Yeah. And this is dynamic. So as price expands, the ADRs get bigger, because if you've got markets that are suddenly moving a lot more volatile, it's going to move more intraday. So our lines expand and ADR increases as price volatility increases. So the whole premise of the ADR reversal strategy is it's a short-term trading strategy. It's not something where we get in and we cross our fingers and hope that it will come back in our direction at some point in the next X days, weeks, months, whatever. So the difference between ADR reversals and RSI mean reversion is RSI is a measurement of relative strength over a period of time. So if it does not a lot, it doesn't give a signal. When it does move a good distance, you get a signal. What we're expecting the banks to do after continuous sustained movement is a profit take. That's where RSI mean reversion comes in. And it's never going to be right. Well, it is right sometimes first time, but not all the time, is it? ADR, we're looking for something to have moved intraday and hopefully revert at some point, either today or during the next day. Yeah, that's really it. ADR is a 24-hour period. So it resets every day, ADR. So every day these lines start in a new position. So once you've taken an ADR reversal, the next day has started, that trade idea is finished. We're done. Yeah, we hit ADR. What happened? We didn't get target. Okay. What are you going to do about it? Your choice now is, do I hold it and hope, or do I exit? And that's really the decision-making process with ADR. It's an intraday strategy. The whole idea is when we get to the extreme of the day, the market will pull back intraday and it won't finish at a high. So if you look at a candlestick, probably the best way to explain ADR reversals is looking at a daily chart. Actually, I've got a better indicator. What's it called? So bear with me a sec. Let me just quickly find it. One sec. Time frame, that's it. So I'm just going to use this indicator to demonstrate the point. H. There we go. Okay, so this indicator shows you a daily chart, basically. So the dark part is the body. Yeah. So you can see the bodies there of these candlesticks. Looking at all these bull ones because they're nice and easy. And then the lighter area is the wick. Yeah, so price pushed down, but it closed inside. Yeah, so we get this big bit here most days where we've got a big wick to the downside or the upside. Yeah, which is basically not where price has done most of its volume and not where it's closed out for the day. So the idea behind ADR is when we move strongly up in one direction, we will exceed that level and then we will pull back to create a wick. Yeah. So your ADR reversals are taken in this section here. So the days ADR reversals work intraday are these days. You're getting in on an ADR reversal and it's getting out the same day. Yeah. You're getting in on an ADR reversal, you're getting out the same day. So we're using intraday movement and intraday volatility to get in and out of the market. If the market's pushed up hard and it closes bull like this one here, so there's that candlestick, yeah, and you get in on an ADR there, the next day there's a high probability it will make a wick to the downside before it decides to continue. So holding for the next day is obviously a very good thing to do as well. If it doesn't play out intraday, give it another day. If it hasn't played out the next day, that trade idea is gone. But from a position trading perspective, we can continuously add and wait for a wick to come that gives us an exit, yeah, which is what I do with the Position Trader EA. So that's the premise of ADR, what it's doing, what it's measuring, and how it should be traded. It's a short-term strategy. It's not a reason to get in and hold forever. Yeah, so if this hits ADR today and we look at a 4-hour RSI, for example, this is a bad example because it's going to be a hit. Let me just try and find one that isn't. There we go. So if this hits ADR today, yeah, and the RSI is only sitting down here, this thing could do that. And which means that we're getting in on position and we're just going to scale in indefinitely. Yeah. So this is why I use RSI strategy for mean reversion position trading rather than ADR strategy. But you can use a variation of it, a hybrid. So that's the strategy and the idea behind it. So when you're testing with the Position Trader EA, I like to get in and get out as fast as I can with it. Ideally, that's the kind of the best. Or you have a system in place which cuts it if it's wrong. Yeah. So basically, if it doesn't work, get rid of it. Yeah. So the ways you can do that, you can obviously use drawdown control. So you could use, let's go with scaling in a quarter of an ADR apart. So I'm assuming here that we're allowed to position trade and we're allowed to use martingale or use a lot multiplication system. So you can either use drawdown control and you can say after a certain distance we'll get out with 100% of our size, or you could say if you've taken a certain number of trades, get out of the last one, which brings our average closer, which gives us that exit. Or you could say, get me out after a certain period of time, 24 hours, or at the end of the day. Yeah. So you can have, get me out at end of day. You can't actually do end of day with a Position Trader VA. You can do close on Fridays. So you could hold it for the entire week. So if you get an ADR hit early week, you assume that at some point in the week, we're going to pull back on it. That gets you out, doesn't it? Yeah. So there's a million ways you can get out. We covered exit strategies, didn't we, in another session? There's many exit strategies, but the getting in part of it, I'm just going to leave that set to 4 and run this one. I prefer to use bigger extremes for the initial entry. So 125, 150 triggers. So with prop, don't forget, our job in prop is to get past as fast as possible. Yeah. Or within a week, maybe 2 weeks. Yeah. So we are looking for our strategy to hit a winning run. Yeah. So we want to get basically a series of trades that work so that our P&L goes like that as fast as possible to 8K if we're using a 100 grand account. So our target is 8% typically on PropNet. Yeah. So our job is to hit 8%. That's it. So you want to do it as fast as possible. So you're going to have two market conditions that are going to help you. Either a range-bound market, you're going to start your evaluation or your trading in a range-bound market, and it's going to go ADR out, ADR out, ADR out, ADR out, and you're just going to hit it easy peasy. Or you're going to get into a trendy style market, which is a strong trend, in which case you want to be taking ADR reversals, which are like 150 ADR. It's got to really have stretched in the day, and we're just going to get out when we come back down again. So a nice medium is 125 ADR because we're putting the odds in our favor. Remember, 125 ADR, the chances of exceeding 125 ADR are 23%. So we've got a 75-ish% chance that the market isn't going to move beyond 125 ADR. Doesn't mean it's going to come down, just means it's not going to go beyond it. So this is the thing you have to understand with ADR. Price moves up, hits ADR or 170 or 125 ADR, whatever the ADR level is. It can either do that or that, the vast majority of the time. If it does that, the next day, it can do that. And if it does that within 24 hours, you want to be out of it because it hasn't worked. The whole idea is we want it to go up and pull back before it does the next thing. Whatever the next thing is doesn't matter to us. We're interested in this, aren't we? Yeah. So you've got to, there you go. So this is taking an ADR long here. Have I got a TP on this? I don't think I set a TP, did I? No. I set a TP. As Noob on a Grind has just said, what have you set as a target? I didn't. So single targets, let's go for, so if we were risking 100, let's do this properly. We got a 100,000 account, so we're going to risk $1,000 to make 500. And if we've got multiple trades on, we'll go for 250. Yeah, because we're wrong. We either want it to work or we want out because we're wrong. Yeah. You can play with these, and obviously this is part of what we're going to do is we're going to try and develop a strategy that's going to work like this. If I get into 4 trades and I'm scaling in a quarter of an ADR apart, i.e. I get at 125 ADR, I'm going to scale into additional positions if it moves 25% of ADR away from me. If we get to 200 ADR, I want you to start shutting trades out because this is really wrong. I've started to get in at 125 ADR. The thing's gone parabolic. We want out. We want to start getting out. We want to get this average up so that we can at least get out with a small amount of money, 250. We're going to make a loss on those. But how often does movement happen where you go beyond 200 ADR? Very rare, isn't it? So we're trying to just get into some high probability trades with a scalp so that we get money basically in the bank. That's the whole idea. We want to get it in the bank as fast as possible. So there we go. So there's one there. We took a buy. It was an ADR hit, 3-bar reversal for those of you that were in the price action session. Yeah. It didn't hit my target, but I got out 24 hours later. Sorry, where's my target? I still haven't set the target. Why did it not save my targets? Oh, it's because I've put them in percentage. 500 and 250. There we go. So let's do that again. Put it in the right box. There we go. So we took a trade there. There's your TP. There's your stop loss. Hit ADR. In, out, made money. Second one, we got in on an ADR reversal. There's our stop loss. Yeah. It didn't move anywhere. We took a second position, a quarter of an ADR apart, and it pushed up. We got out with our target. There we go. So it didn't hit the first target we set, but the 2 targets together, we got 1/4% out of it. Yeah. So we're looking for 0.5% on individual trades that work, 0.25% on the ones that don't. Pushed up, hit ADR, taken our short. Pushed up again the next day. Third entry and exit. Yeah. So that's a typical ADR trade. So we're looking for the market to be extended. It's unlikely to be extended again another day. If it does manage to do that, it's going to find it's very difficult to get any more movement upside without some kind of pullback on it. Yeah. Weeks like we've got with US dollar CAD at the moment, where you've got 11 parabolic days, you'll find there's wicks on those parabolic days as well. So the market will move down before it does the parabolic move. Yeah. So an 11-day rally on things like the US dollar CAD, and this is where ADR works very well. Yeah. You've got, actually, it's not actually, this is really parabolic, isn't it? But you've got a pullback there. You've got a little tiny pullback there. You've got a bit of a pullback there. So we did nearly 50% of that. You've got a pullback there, which was 50% of the previous day. You've got a pullback there, which is 50% of the previous day. So of all these days, if that was an ADR, you probably wouldn't have got out on that one. As it pushed up, it actually gapped down, which would have got you out there. But you've got 1, 2, 3, 4 days where you had a decent pullback, which would have got you out of an ADR reversal. Yeah. So this is the beauty of ADR reversals. They are very high strike rate. But there are instances where you just need to pull the plug. So there you go. So there's a short which worked. There's a long that worked. There's a short that worked. There's another short there, which is working. Didn't quite get to target. We're going to take a second entry on this one. Run it faster. There we go. So there you go. So second entry, third entry, out. So if you look at the equity curve, right? Our target is 8K. We've done half our target in 13 trades in total, but 13 trades, not 13 positions. So you've got 1, 2, that was a break even, 3. I'm just counting these, you can't see off the screen. 4, 5, 6, 7. That was 3 there, wasn't it? 1, 2, 3. So that'd be 8, 9. So 9 trades, basically, we've done half our target. Yeah. So, this is a strategy is working. The idea is we've got to get 8K. So we're going to get a point where we're going to hit a losing run. There we go. So you're going to get a point where you're suddenly going to get drawdown. And these moves, let me just get rid of these for a minute. So these moves here where you get this, yeah, they don't concern us in prop. Because what is that? A failed evaluation, a blown account. It hasn't worked, yeah? But we don't care about long-term consistency. Our job is to pass an evaluation. Our job is to make an 8,000 profit as fast as we can so that we can get that funded account and hope that we get another run so that we can get to a point where we can stop and withdraw the cash. That's our job. We're not looking to be consistent, long-term profitable traders. We're looking to hit the targets they've set. Yeah, it's a game, right? It's not a long-term proposition. So we started again there on a new evaluation because we blew that one. We got to 2,700 on the way to our 8 grand target. So then we started again with 9,700. We're now up to 10,500. So 9,7 and 10,5 equals what? Pass. Ta-da! We just passed our evaluation. Job done. Yeah, it's not about getting a strategy with an equity curve that is beautiful. It's about getting the target hit. There's 8 grand. Done. Yeah, we just come up with a set of rules I'm making up as I go along with ADR reversals. It's about scalping out the market quick. So let's see if we can get that equity curve from there. So that's trade 50 to go a little bit. Let's run it forward and see what happens. So from trade 50, oh, we haven't really taken many, have we? We are now, this is our live account, right? Here, from here. So we started on 10,400. We're up to 10,500. So you've made 1.5 grand. This evaluation, because it's a 100K account, costs $500. Yeah, we blew one, passed one. So we've spent $1,000. And now we are $1,500 up. Tick. Stop trading. Withdraw the 1,500. You've paid for the evaluations. You've made $500 profit. Oh, and they also gave you back 500 of that, remember, because you passed the evaluation. Yeah, they give you back a refund. So we're naturally now up $1,000. So take that money out, stop, and now we'll start trading and see what happens with our account. Run it on a bit. Trade 53 we were on, which was here. So we took a bit of drawdown from 10.5 to 10.4, and now we're up to 10.6. So we've made 6K. Yeah. Prop is not about finding a good strategy, is it? ADR works on it absolutely beautifully if you can position trade. We know that because position trading works. That's why I do it. Yeah. That's why everyone else is dying, because they're using a market order to tell them to get out. Yeah. So there's one strategy which works, right? Now you can also, this is conservative, fairly conservative. Yeah. So we're up to 10,900, right? So from here to where we passed the evaluation, which was trade 50, wasn't it? There. So from when we passed the evaluation here, we've run the account from 10.4 to 10.9. So we've made 5 grand. Is that a month? Is that enough to pay the mortgage and the bills for a month? Yeah, if it is, stop, take the money. Job done. Easy. Would say, Linus, can you get rid of that banner? I can get rid of the banner. There we go. Yeah, so that's a pass. Let's just run it on and see what happens. Now, the other thing to remember here, I am only trading the pound US dollar. One instrument. Yeah, I'm not doing anything else. I'm just trading pound US dollar because we have got to worry about our intraday drawdown. Yeah, when you're position trading, you are going to be in drawdown. So although I've got a lovely equity curve, I'm up 21 grand now. Thank you very much. There's the mortgage paid for the next quarter. Actually, there's my mortgage paid for the next year. We're doing absolutely fine. But you are going to be in drawdown. And at some point, this thing's going to go... Because we're going to hit... There you go. We popped. Bang. You're out. Gone. 10,000... 12... what's that? 26.5K dropped down to 12. We've blown the account. Never mind. Let's start a new evaluation. Yeah. This is irrelevant. This is irrelevant. This is irrelevant. This is irrelevant. It's going to happen. Every strategy on the planet is going to have that. If they allow you to position trade, position trade. Yeah, but just keep your risk under control. So the settings on that, on the pound US dollar, that's trading an hourly time frame as well, by the way. Yeah. So we're waiting for stronger confirmation on the ADR reversals. If you drop it down to M15, you are probably going to get more drawdown in there. We'll just run it and see what happens. You're going to get more periods of drawdown probably in there because you're going to get in tighter. That's an account blow. And it's not. Only drew down 3 grand. You're okay. That was an account drawdown to 99 from 103. That's fine. That's within 5K. Yeah. So there's 4 grand, 5 grand, 6, 7, pass. Yeah. So that's running on the 15-minute time frame. You're going to experience more drawdown more often on lower time frames because obviously you're trading more chop. etc., etc. Yeah. So that is the normal ADR reversal strategy for position trading. Okay, so we're getting in with $1,000 risk, high risk. We've got 5% drawdown per day, 10% drawdown in total on the account that we can use. We're using a lot multiplier of 1.25. We're spacing a quarter of an ADR apart, and we're getting in at 125% of ADR. So by the time we get in, the market is way beyond its normal range. So I am going to get in fairly tight, and I just need a little bit of a pullback to get me out with a little bit of a 0.25% because my initial trade didn't work. So the trade idea is we get in with a negative R, and we try and make 500 quid every time, $500. If it doesn't work out, we just try and make a 0.25%. Play with these numbers. Yeah. Sometimes you'll get into an ADR and it will go down to ADR. That's a pass in one trade. You've no idea when these moves are going to unravel, how far they're going to go or anything. But if you get in big and you get in scalpy, it'll work, right? So we're getting out if there's 4 trades against us. We're taking losses. But to be honest, if you get 4 trades against you and it's moved 200 ADR in your position, you're probably going to blow the account on drawdown rules anyway. So you just start again. Yeah. That's pretty much it from a rules perspective. This is trading 1 a.m. to 11. You're only going to get ADRs on pound US dollar intraday anyway. We've got a close on Friday exit set to true. So when we get to Fridays, we don't want to hold over the weekends. Some prop firms don't allow you to weekend hold. And also, you are going to get big spreads and big gaps. Yeah, at weekends. Or you're going to get big spread gaps, basically. If you hold over the weekend on prop, I've done this so many times. When I was trading a lot of prop, I've blown accounts and lost funded accounts because I held over the weekend. Because you go into the weekend with $2.5 grand of drawdown, Monday morning or Sunday night, markets open, bang, 6,500. But within literally 10 minutes, you're back down to what it was on Friday because you're not actually being gapped. The market has just spread, and the spread will kill you. There's nothing you can do about it. You could try an exit on a Friday as well, an exit on 24 hours as well to gradually scale out. This is going to slow down your progress, but it will give you a more consistent equity curve when the market's moving your way. So that's one strategy. The other way is you can go in with higher ADRs. So if you go in with 150 ADR, so let me just run this on the hourly again, just to get the strike rate. Once it hits 125 ADR, do you just buy or sell? No, you wait for a cross. So the position trader EA waits for a cross. So you have to have a reason to get in. Don't get in just because it's hit ADR. Get in because you've got a signal. Remember, we've covered in the other member streams reading price action. When you get ADR hit, wait for some kind of 3-bar pattern, wait for a bearish engulfing, wait for a shooting star or a hammer, but ideally wait for a multi-bar pattern that confirms bearish price action. The bears have got in. Or use, as in the position trader, a moving average cross, which is tight, like a 5 or a 9 MA on the time frame you're using. A 5 is probably better. Get in quick. These trades happen quick because they're intraday. So what you are basically, think about an airplane stalling. Yeah, you're riding price up and it's going up, 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 up. We're getting so high, we're running out of oxygen. The aircraft stalls. What does it do? It comes down way faster. This we have to get into quick. If you wait too long, you'll have missed the move. But you also want confirmation that the move is underway, not that the plane is just going to carry on flying. Yeah. So you need some price action to tell you to get in. Don't just get in because it's hit ADR. That's what the position trader does. So the position trader EA uses a moving average. In this case, I've got it set to the 5 EMA. Yeah. So it's a tight one. The last 5, it's the average price of the last 5 candles. Exponential. Exponential is better than simple because exponential is adjusted based on volatility. And as we're moving up fast, i.e. we get into ADR, the candlesticks will be bigger. So you want your moving average closer. Yeah. So it doesn't matter too much. I mean, you can test this. You know how to do, hopefully if you've watched the streams, you know how to do robustness testing. So stick that on there and change it from exponential to smoothed and simple, and it will test all variations of moving averages. If they all work, doesn't matter. Pick one. Doesn't really matter, does it? We're trying to make money based on the odds here. So yeah, so that one works very, very well. The other thing you can do is, and again, we're looking at strategies with ADR that allow you to scale in, use a higher multiplier, 1.5. So getting us in with bigger lots faster. So if you look at the average number of trades, and you can get this data out as well in the export facility in the position trader EA, if you look at the average number of trades, the vast majority of the trades that we are winning on have 2 or 1. Yeah. So if it's going to work, it's going to have 1 or 2 trades in it. So that makes sense that we can get in with a much bigger lot size on our second position if the vast majority of the time, because we're in at 125, it ain't going to go beyond 150. Yeah. So our average will be here and our exit will be very easy to achieve. Yeah. So if it's wrong initially, we're looking to get out as fast as we can. When it goes wrong, right? So there you go. There's more, look, singles. Yeah. There's a triple, a double, single. There's a double, triple. Yeah. So you have 1 triple there. Double, single, double, triple, quadruple. Yeah. If it goes beyond that, you're probably going to blow the evaluation or the account anyway. So why not get in super aggressive? So the strike rate on that was 68%. Okay. Bear in mind, some of those trades that we took are going to be losses. Yeah. So here, 1, 2, 3, 4. That was profit, that was profit, that was loss, that was loss. So the strike rate that will be recorded down here is 50%, because 2 of those trades were losses, 2 of them were winners. So this 68% strike rate is on the trades individually, not the positions. Yeah, important. That was 100% strike rate. That position was a winner. That position was a winner. Only half the trades were profitable, but it was a winner. Yeah, so 68% strike rate. I just wanted to see increasing the lot size. So I've increased the lot multiplier up to 1.5. Again, play with this, but I just want to see what impact this has on strike rate, if it has any. I don't think it will, but what I think it will do is smooth the equity curve out. Yeah, so you're going to get a smoother equity curve by getting in with a higher lot size, because the trades that work are going to work faster. The ones that don't work are potentially not going to be losers, because we're getting out quicker because we've got more lot size on. So the equity curve is much smoother. Strike rate is 66, so it doesn't make a difference to strike rate. So changing the lot multiplier. Now the problem with this is obviously your intraday drawdown will grow. Yeah. So that's something you can also use. The other thing you can do is not use a lot multiplier. So some prop firms will allow you to get in and add to a losing trade, but they will not allow the lot size here to be any higher than the lot size here. So that you can get into another trade, i.e. you can spread your risk over multiple trades within a position. Yeah, it's not an unusual strategy to get in with a tester trade and then add more size when you see another opportunity without having hit the stop loss on that trade. Yeah, it's nothing, that's not unusual, is it? So a lot of them will allow you to do that, but they will not allow you to put a larger lot size on this second trade. So if the prop firm allows that, you can try using a 1 lot multiplier, but get in with higher risk. Don't forget, our job is to hit 8K, right? The more we risk, the more probability we've got of doing that. So we're looking for high probability strategies, which ADR is. Yeah. So if we go in with a bigger lot size and we use lower lot multiplication, you're going to make money quicker. Yeah. That was straight up to 12 grand. Just like that. We're now up to 32 grand, 36 grand. We're not taking any drawdown. There we go. First drawdown at 32K. This is one instrument. We've got 28 of these. Now, obviously, again, covering on Thursday, exposure and confluence of trades. So if you are trading the pound US dollar here, and then you suddenly go in to trade Euro US dollar CAD, and US dollar Swiss, if they all hit ADR on the same day, and that happens to be this day, you're going to hit your drawdown almost immediately. If it happens to be this period and you get into all four, you're going to hit your target in one day. Yeah. So again, you've got to look at exposure and use exposure to your advantage. If the US dollar has rallied today on news and it's hit 125 ADR on 4 instruments, if you use 1% risk, $1,000 risk on all 4 of those, and all 4 of those play out, you've done 0.25% your target in hours. If they don't work, you might blow the account. But what's our job? Hitting 8K, not being consistent, not being profitable long term, hitting the target they set. It's a game. Yeah. So you need to use a strategy that plays the game, not a strategy that works long term. This just happens to work long term as well, but which is obviously why we do ADR reversals. It's got a long term edge, but we're trying to get this thing as fast as possible to our target level. The other thing you can use as well and test this out is exiting individual trades after a period of time. So getting out after 24 hours if the trade hasn't worked out. So these ones where you're getting in here, you'd have got out there anyway, and there. See, this is the thing with ADR reversals. Most of them play out within 24 hours. Because we've had the extension, the market is exhausted. The whole purpose is we're expecting the market to die, isn't it, and come back the other way. So most of the time that was a Friday exit. So we took a trade on a Friday. We had to close on the Friday. So we didn't want to hold over the weekend to take all this swap. But that trade there, if it hadn't hit target, would have exited there anyway, because it was 24 hours later. So another thing you can try is not using TPs. So if we set our targets at, I don't know, let's go 8,000. All right. So our target's 8 grand. So we're going to get in and get me out when we hit 8 grand, or get me out after 24 hours. Yep. So this is another thing you can try. Run that strategy. Again, we're looking just to hit a target, aren't we? So we're taking drawdown. We've taken 4 grand's worth of drawdown there. Hang on, slow down. Oh, I can't because I'm not doing visual. But right, so I'm picking this. Can I turn my cam off? That's me gone. Yeah. So I'm picking this. We started there. We took drawdown to the level of there. So we ran up to 4,700. We ran down to 7. So that would have been a blow. Oh no, well that's 8 grand in multiple positions. Our target, our allowance is 10, isn't it? So we haven't blown. But from that point there, that run up was 15K. So that is an evaluation pass followed by an evaluation pass followed by a profit. Or, I mean, everything's one stage, isn't it now? So it's an evaluation followed by 8 to 10K. Yeah. Because we are saying basically get me out after 24 hours. So when you get into an ADR reversal, you are going to capture the ones that go boom, A-shaped recovery. you're going to capture the A-shaped recovery. The A-shaped recovery is going to be a huge profit. Yeah. But if you get in and it pushes against you, you're not getting out. So you're going to take big losses occasionally. But look at the run up there. So we went from 5K to 30K in that run up. Yeah. You're working within their rules here. You're getting in and you're basically getting out the next day, but it's allowing you to scale in, right? So again, blown account, probably past account and a withdrawal. Blown accounts, don't know what's coming next because it's the future. But there you go. So that gives you an idea of when you can run. As soon as you start placing a stop loss on the strategy, let me just reset everything. So we'll get in with 1,000 again. Oh no, that's not right. Go 1.25 and 0.25. Sorry, I can't scale in, can I? So I'm going to set. So this is basically a version where you can't scale in. We're going to do now. So the way that you would do this with a position trader EA is set the distance between trades in ADR as something like 5. So basically, we're saying, get me into my second position if we've moved 5 ADR against us. We're not going to do that because it's not going to take a second position. Yeah. So that's how you turn off position trading, if you like. So targeting wise, we need to just reset the percentages. We're going to do the same thing. Targeting 500, we'll target 250 on those ones, but we need to get out of our trades. Yeah. Completely with 100% of our position when we hit a ADR. So we're risking 1,000 over 1 ADR. So that stop loss there is 1 ADR. If we want to use a half ADR stop loss, we would put a 0.5 in there, right? So basically we're saying, get me in at 125 ADR. If it hits 175 ADR, shut the trade, all of it. Yeah. We can have that set to false because obviously it doesn't matter, does it? Because we're only taking one trade. And then we're basically going for a negative R. So we're going for a negative risk reward ratio. So we're looking for our trade to be 1 ADR stop loss and half ADR TP. Yeah, it's a scalp. We're expecting that or that. Doesn't matter what it does after that. That's what we want. This. We want half an ADR of pullback on the trade. And again, adjust this. You could use 1/3 of an ADR. But what we're doing is we're giving our trade room to breathe. Yeah. So the distance in stop losses you can play around with, but using, for example, half an ADR in this case, just make sure I got everything else set correctly. That should be right. We'll do this in visual. Let's use hourly to start with. There we go. So we got in on that trade long. We got half an ADR of a pullback on it. You'll find there's no stop loss in place because obviously we're not using stops, but it will have got me out at 1 ADR. So again, let's wait for another trade. There we go. So that one was a stop. Is that a 24-hour stop? No, it's not. Let me just quickly see what the reason for that was. Drawdown control completed. So that was a drawdown control. So that's got me out with a 1 ADR drawdown control, or half an ADR I set, didn't I? Yeah, let's just let that run on a bit. Okay, so we've taken some drawdown. Obviously, this is going to be a much spikier P&L because our job here is basically to lose money. We're going to lose money when the trades don't work. But the strike rate is high. But the problem with using a negative R is you're going to have periods of stagnation because you're going to have a strike rate of 60 to 70% on it because it's a mean reversion strategy, but your reward is smaller than your risk. So when you get a trendy market, you're just going to get stopped out. So there you go. So that is what happens when you use a stop loss. Yeah. This is why a lot of these prop firms require a stop loss because they know you can't profit. Yeah. Long term, you're going to hit stagnation. And this equity curve over time may well look like this, because the market conditions that suit the strategy will keep coming around. And it's very robust when the market conditions are wrong. It's a good strategy. It works during this condition. During this condition, it maintains its money. It doesn't lose money. This is what it's all about. Yeah, so it's a good strategy. But they know that this period here, you'll be banging your head against the wall and going, this is crap, I'm going to system hop. Yeah, they're playing on you having stagnation using stop losses so that you get frustrated. When you get frustrated, you do one of two things: change system and strategy and not go wrong, or you over leverage and go wrong. Yeah, so using a stop based strategy is very, very difficult to do unless you're going to give it room to breathe, in which case ADR reversal strategy is quite hard to use. So if we increase that to a 1-to-1 risk reward ratio, and if we get multiples on, we'll go for a half to try and get out quicker. I know we can't because we're not taking multiples, are we? So if we change that to a 1-to-1 risk reward ratio, if you look at the strike rate, we've got 56%. Yeah, that was using half. So we are profitable 56% of our trades, but because our reward is half of our risk, it doesn't make money. So let's move it up to a 1-to-1 risk reward ratio. So we're basically flipping a coin. But we're flipping a coin after the market has pushed and extended. So we should hopefully have probability in our favor. Yeah. There we go. So we're giving the market room to breathe, but we're also getting out when we're getting the same amount of risk and reward. But when the market goes into a tight range within ADR, it's just not going to make money. That's a trend. Yeah, but it's not losing money, is it? This is the thing. Now it is. So, you know, using any kind of risk reward based strategy with prop, you've got to be super, super high with your risk reward, which is going to bring your strike rate right down. So the best thing to do if you've got to use a stop loss is to get in with high risk. Let's get in with 2,500, for example. Yeah, and we're going to look to get out with, let's go with 3,500, for example. So you've got to get in with a high risk and get out with a higher reward. Yeah, and hope that you hit a lucky run, basically. Or you've got to get in with a high risk and a small reward. Yeah, so still using a stop loss, but your reward is going to be somewhere in the region of like 750, for example. So about a third or something like that. What that will do is it will give you a massively high strike rate. You can also try different ADR levels. The higher the ADR, the less trades you're going to get, but the higher probability they are playing out. Yeah. So let's just run that and see what that one looks like. So when you get losers, they're going to hurt. But when you get winners, they're going to kill it. Absolutely kill it. Just slow that down so the equity curve draws better. Yeah, so the run up, the run down there from high to low, because they all use trailers, is somewhere in the region of 1,500. The run up was just under 8 grand, just under 8K. But we're using massive risk, $2,500. We're only going to take 1 or 2 trades a day max. We can only take 2 trades a day with 2.5 grand, or be in 2 trades at a time. But we're using $1,000 reward. But because our risk is over 1 ADR and our reward is over a third of an ADR, we're going to hit it a lot because it's a mean reversion strategy. Yeah. So that one works out pretty well, doesn't it? But again, it's not to do with long-term profitability. It's to do with when you start your evaluation. If you started your evaluation there, you're doing all right at the moment. We'll see where this ends up. If you started your evaluation there, you've pretty much passed. Yeah. But it's all about risk and hitting the target. So you need to adjust your risk to achieve whatever they're setting you, rather than trying to be consistent. This is what I look for: consistency. Yeah, because I want to make money over a long period of time. I want to be consistently making cash, but I know I'm going to lose money over periods where the systems don't work. This is totally different, isn't it? Let me just catch up on chat. Looks interesting, but on M15, I run it right now on M15. But I also run it with 5 EMA instead of 9. Yeah, so this is using the 9. M15, I mean, we'll try it. You can try different time frames. Different time frames are going to give you different results. So you're getting in on more market chop on lower time frames. So you're going to get more signals. Specifically with the position trade, the position version of the strategy, that will work very, very well, regardless of what time frame you use. But look at the difference on M15 when you're using a stop-based strategy. And this is what they're relying on. The whole premise of prop is relying on you getting frustrated and making mistakes. You use a stop loss, you will lose money. When you lose money, you get cross. You get back to where you were and you think, right, I'm resetting myself. I'm not going to make that stupid mistake again. You get a couple of wins and then you get a loss and another loss and another loss. And then you get angry. Stop loss based trading, and this is the whole premise of the position trading bootcamp, isn't it? Drives you nuts. So what do? You cock it up all the time. Yeah. Got to run up there. So this is a 15-minute time frame version of the one that I just showed you on the hour using the stop losses. But you can see how difficult it is to make money in prop. And it doesn't matter what strategy you use. It's about getting in with something with a high strike rate. So you've got to use a mean reversion strategy, yeah? Or you've got to get lucky on a trend. So you could use a trend-based strategy and go, okay, I've got a breakout, I'm going long, and I'm going to hold it till I get to 8 grand or 4 grand, and try and get a couple of lucky back-to-back trend trades, although the strike rate's going to be 20 to 30%. So you're not going to get a lucky couple of back-to-backs, are you? Mean reversion, we can get 70% strike rate, no problem. So what we've got to do is leverage that strike rate to get in with big risk and make money as fast as possible. That doesn't work on 15 minute because it's got a negative R and you're going to trade chop too much. Let me just catch up. If you run the set file over the past 10 years, does it have a long-term edge? I don't know. It doesn't matter, does it? I need to make 8 grand this week. That's my job. I can give a monkeys whether it's got a long-term edge. It's not the goal, is it? Our goal is to make 8 grand. Let me put me back on again. I'm back. Realized I've disappeared. The strategy is highly dependent on the instrument. Yeah. It is, you know, and this is the thing. It's very instrument specific. And again, you could get in with bigger distancing. So let's just move that back to 1,250 and 750 on multiples. So you can get in with more spacing between your entries as well, is another method you can use. I'm just going to turn that off. So I'm not going to do drawdown control. So if you think about it with prop, what our stop loss is basically is our drawdown, isn't it? So we're looking to stay within drawdown. So the higher the risk, the higher probability of you hitting your drawdown limit. But if you try this on different strategies, you want to find strategies that have a lot of news, basically, instruments rather, that have a lot of news. So we're looking for stuff that is US dollar cross based, really, because the US dollar moves the vast majority. So pound US dollar is great. Euro US dollar is great. Anything that trends, probably not going to be great, but it'd be good for a trend strategy. But trend strategies take forever to get profit. We're not, you know, this is the thing. I've got a trend strategy that makes a fortune. I'm going to trade it on prop. You're not going to survive long enough. Yeah. Because you'll get into a trade and it's going to take 4 weeks for you to get that profit out the market, that 1%. You've got to do 8%. You need to be in, out, done as many times as a day as you can, but with high probability setups. Each of these bumps or bubbles here is a fail. The drawdown is too high. You'd have been hit your drawdown limit. You'd have hit your drawdown limit. Yeah. This is us making a shed load of money. Possibly hitting drawdowns. We'd have to check, but we're not interested in this. This is a fail. We don't care. We're making money when we're making money. When we're failing, we're spending 500. You know, this is the thing, isn't it? Basically, every one of these bubbles, right, is $500. Is a restart on your evaluation. 1, 2, 3, 4, 5. There's 2.5 grand flying past. I've got 68k in profit. I've spent 2.5k to get 68k. That's the game. That's how you do it. So ADR works with position trading, but you know, when trying to find a stop-based strategy is a lot more difficult. But play with it. Use the drawdown control settings to try and find one. Just turned on hedging settings and put 250 in combined TP. It reduces the drawdown, but obviously depending on the prop firm allows hedging. This is running on 15-minute time frame as well. So look, we're 92 grand up. Let me just stop this because there's going to be a hell of a lot of drawdown in this. Yeah, again, you ignore this. 38 grand a drawdown. No, it's not. It's either a blown account or a failed evaluation. The number is irrelevant. If the number is over 5 or 10, you lose. That's the way you look at the evaluations. Yeah, the report. We lose. Yeah, it's too big. We lost, but we started again. Now we're 90 grand up. So we're going to lose some, but we don't lose the 38, do we? Yeah, this is the thing. This is much higher. The absolute drawdown was 27k. That's just a failed evaluation. Add that 27k on there. We've doubled the account. Yeah, it's a totally different way of looking at it. So hedging. So let's turn on hedging. I don't think hedging really should make a lot of difference because the chances of you hitting ADR and getting into ADR again in the opposite direction without taking a profit is not going to happen, Harold. I don't think. We'll try it. We'll run it. But I don't think you'll find it's going to make a difference. Because to get to the opposite end of ADR, you've got to have moved ADR. If you've moved ADR, you've taken profit on your trade. Yeah, it's not going to make any difference. Also, changing ADR 10 to 60 gives a further drawdown reduction. Yeah, so I've never tested the statistics. So when you're changing ADR number, obviously that's going to change the levels on your chart. The statistic on a statistical analysis I've done on ADR, which gives us these levels, these percentages, this 42, 23, etc., is based on ADR 10. I have no idea what the percentages are on ADR 60. So I mean, look, we can test it, can't we? Let's test it. This is what it's all about, testing. ADR 60. Oh. And we'll use the same settings. But again, drawdown is irrelevant. Drawdown is blown. We're looking to get a run of winning trades that gets us to a target set by the people that have put the test in place. We don't care about blowing an account because it's not money, is it? It's $500. Every evaluation you take in a prop firm is 500 or 250 or whatever. It's an amount of money which is fixed. The account size is related to the amount of money. So when I take a 100K evaluation, they charge me $500. My risk is $500. If I blow the account, I lose $500. If I blow the account by 50,000 or 10,000, I lose $500. I don't give a monkey's what the drawdown is. That's not my job. My job is to make money fast. I'm 40 grand up. I've blown 2 accounts. But I didn't blow an account here, did I? I passed an evaluation. I traded a live account and I went, holy crap, love, book the holiday. That's what I did. And then I blew the account and said, cancel the holiday. Nope, you're all right. That's what it's about. It's not about making, but you need one that allows you to position trade, in my opinion. ADR reversals are fantastic. Do you avoid yen and Swiss? Yeah, so watch this. You watch me prove myself wrong. But I'm pretty sure I won't. So anything that trends, a trend starts with a breakout. A breakout tends to be an ADR. Yeah. So when you get an ADR breakout in a trending pair, it tends to continue. Right. So look at that drawdown. That was $5.5 grand drawdown. Made money, but it was 5.5K drawdown. So that's a blown evaluation day one. But anyway, right, that would have been a blow. That ran up to 26K and came back down to 20. So that's 6K drawdown, yeah? So don't forget, 5K is your intraday drawdown. If one position goes into 5% of loss, 5% of drawdown before it exits, that's a blown evaluation. So that's what I mean. Each of these bubbles is going to be over 5K, which is your intraday drawdown limit. But again, we're not using a trend filter. Look at what it's doing without a trend filter. If you add a trend filter to this, as we discussed in the Discord group yesterday, what my findings are of adding a trend filter into this is you filter out half your winning trades. You filter out half your losing trades. Doesn't make a difference with mean reversion. With a trend-based strategy, breakout strategies and trend pullback strategies, moving average filters are useful. With mean reversion strategies, the moving average filter is just telling you what's happened in the past. We're interested in today. It's gone too far and they're going to need that on their way up. So we don't take that trade. We lose it. Look at that. 80 grand of drawdown. Bust. Don't care. It's cost me 500. Yeah. Doesn't matter, does it? Yeah, as you just said, Linus, never mind. Doesn't matter if you're getting in and out quick. This is it. It's a scalping strategy. ADR reversal is a scalping strategy. Yeah. RSI mean reversion is not a scalping strategy. It's moving slower. You're using hourly time frames of multi-day and week movement to trigger an entry, which can take days or weeks to unfold. ADR is, holy crap, today's gone mental. Let's get out. That's it. That's what ADR is all about, is that quick in, out, make money type trade. You're testing a 4-year period? Yeah. Yeah. So that's a 4-year test. Obviously, you're not going to do this on one instrument. If you did do it on one instrument, it's going to take a lot longer. Yeah. So, like I said, adjust your risk accordingly. You can trade 10 instruments with $500 risk, or you can trade one instrument with $5,000 risk. The risk is up to you. What I'm showing you is the fact that this strategy works. The instruments that you place this strategy on, and this is what I keep saying with prop, The strategy has nothing to do with passing prop. Passing prop is to do with the date that you start the strategy. If I started my strategy, my evaluation here, I blew the account. If I started my evaluation here, I passed and withdrew. If I started the evaluation here, I passed and blew the funded account. If I started my evaluation here, I passed, had drawdown in funded, got a withdrawal, had drawdown in funded, carried on and drew out money again, and possibly blew. I don't know. But it's nothing to do with the strategy. The strategy basically goes, this thing's moved up, flip a coin as to whether or not it's going to pull back or not. It has no idea whether it's going to pull back or not. But if it does, we use massive amounts of money to try and get a small amount of movement over and over and over again, because the ADR reversal strategy has a high strike rate. It's all about the edge. The edge of the strategy at 125 ADR is 75%. Well, it's not 77, but roughly 3/4 of the time, it doesn't go beyond it. So we know that 3/4 of our trades are either going to work, stagnate, or go into drawdown a little bit. If they're going to draw down a little bit, we can average in to escape quickly. Our edge. It's about creating the strike rate. And we don't care if we blow our account, do we? Which is why martingale, you know, if you go in here and stick 2 in here, right, and stick let's go for the full whack, full beans, 1-to-1. You'll probably find this will make a massive amount of money, but it will pop. Yeah, it will go make a shed load and blow at some point. There you go. Martingale. This is why we don't use martingale. Yeah. There will become a point where you will have the losing run which exceeds the available balance on the account, and it will just blow. I'd lost 100 grand there, but it made, before it blew, 12 grand. What do you need? 8. Well done. Pass, withdraw, blow, rinse, repeat. But don't use martingale. I mean, it's just nuts. This is the reason they don't allow you to do it. Yeah. This is a ridiculous test, the one I'm doing here. 0.25 might last a bit longer, actually, because it'll get out quicker. And we're trading the yen as well. So we're putting this in the worst possible situation it can get to, aren't we, really? There you go. That made, before it blew the account, it made 40 grand. But I mean, it would have blown the account in those anyway. So, but you get the idea, yeah. So long and the short of this session, I think, really is try and find a strategy, a prop firm that uses that allows you to scale into positions. And its martingale rules are proper martingale rules, in the fact that with martingale, the official definition of martingale is doubling the account, doubling the lot size. So if you get in with a 0.1, the second entry is a 0.2. That's the official rules of martingale. It's a gambling strategy where you double your risk on losers. Yeah. What we do as position traders is we either get in with the same size here or a slightly larger size to average into the trade to allow an exit. Yeah. So getting in with a 0.1 there and a 0.12 there, or 3 if you're using a 1.2 multiplier, one of those two is not martingale in my official definition and most people's official definition of it. but you've got to check with the firm. Yeah. And also, when you're doing this, when you check with the firm, check the evaluation rules compared to the funded rules, because they have different evaluation rules to funded. In evaluation, you can use martingale. In funded, you can't. So what it means is you can pass an evaluation with this fairly easily, as we've just seen. But when you go live, you're going to have to switch strategies, which means basically flipping a coin and going for those big risk reward trades. I made my biggest withdrawal from my forex funds by basically gambling it up to 5k. I got in with a 2k trade twice, yeah, and I basically used a small risk reward on it with 2k, and I went, right, I've got my funded account. It's 100k. It was the one, no, it wasn't, it was E8. It was E8 because the withdrawals were faster. It was the same day withdrawal. So I got into the funded account with 100k, and I went 2k, doubled it, 2k, doubled it, and it actually doubled a little bit further because I wasn't using a stop. I got a pop and I took it out, and I got 5k withdrawal, just shy of it, on 2 trades, flipping a coin and hoping I would double a 1R, because there's a 50-50 chance. It's not trading, is it? It's going into a fruit machine and going start, jackpot, start, jackpot, start, loss. After 2 jackpots, take the money and walk away. You've paid for your evaluations, you've withdrawn a cash that you can survive on, and hope you get that winning losing streak. Let me just quickly show you the again, the Swiss Army knife thing. The equity curve, yeah. So we are going to have an equity curve. Are we trading? We're not trading. Why are we not trading? Because I haven't set it up. True. 1-to-1. There we go. So this is an equity curve, which is going to give me a 50% strike rate. No, it's not. What the hell is this doing? Let me reset. Reset. All right, just get me into trades with a 1-to-1 risk reward ratio. There we go. So we're basically going to come out at the end of this with roughly, oh, that's not doing what I want it to do either. I don't know what I've got this set up to do. I want to try and prove a point, but I can't because it's not working. What have I done wrong? Or have I broken something? Let me just do this on the pound US dollar because I know it works on that. Maybe there's something wrong with the yen. I need to check that. I don't know why that's not working properly. But I should be returning roughly a 50% strike rate on this. Unless I've broken something. Why is it not trading now? Anyway. The point I was going to try and prove, which I obviously can't because I've broken something, which I'll have to double check, was that when you get a 50% strike rate, within that 50% strike rate, and within that getting roughly the same amount of money returned as you, there we go. Right, so within this 49 profitable trades and 51 losing trades, we have this thing, consecutive wins, 2, consecutive losses, 2. This is actually pretty good, isn't it? So within this strategy, I've only got a losing streak of 2 and a winning streak of 2. But my consecutive, where's the consecutive? Oh, there you go. Sorry, I'm wrong one. That's the average. I've been talking too long, haven't I? So, right, maximum consecutive wins, 8. Maximum consecutive losses, 11. Yeah. So this is why martingale doesn't work, right? When you get 11 trades in a losing in a row, you can't get the leverage on, or you blow your account, right? But the consecutive wins were 8, the consecutive losses were 11. So can you imagine getting 8 consecutive wins on the trot with 2.5K on each of them? Your mortgage is gone, literally, on that. This is using 1-to-1 risk reward ratio. Yeah, this is an important factor that people miss, and this is why all these EAs out there that use martingale look really good until they don't, because when they hit that, you can't sustain it. Even if you get in with a 0.01, yeah, you can do this with your calculator very easily. Take a 0.01 times 2, yeah, so that's 1 times 2 times 2 times 2 times 2 times 2 times 2 2 times 2 times 2 times 2 equals. We're getting in with 20 lots. We started with a 0.01 lot. By the end of that losing run, we're trying to take 20 lots. That's not available because we have lost so much of our account on that losing streak. We haven't got the leverage to get it on. Can't do it. But we'll look at this in hedging as well. Signing up for FTMO now. Go for it. But be aware that you are going to get, you know, this is the thing. It's going to stagnate at times as well. But check their rules. It's all down to their rules. There's nothing wrong with martingale. There's nothing wrong with high risk trading and scalping and all this sort of stuff. But it's not going to be consistent. But as long as you understand that, it's fine. You know, I've got somebody, one of the guys that used to come to the US sessions, Brian. He trades with Apex, which is a futures prop firm. And he's, you know, we used to talk about it an awful lot in the afternoon sessions when we were doing futures trading. And there's something to be said for running 8 to 10 consecutive evaluations at the same time. Yeah. And on each of them, you just take a different trade. By sheer random distribution of luck, you will pass one of those. So if you spend $800, which it would have been with Apex, to get 10 accounts, because they're 80 quid each a month, if you spend $800 with them, and the one that you get along the line, you get that first trade that works, you're going to make 1 to 2K. So by pure random distribution and luck, you will pass. If you happen to get 2 or 3 accounts out of that batch over the line, you're going to make a lot of money. Very easily, yeah. And like Hal's just said, propulsion gap strategy, yeah. When you get a propulsion move, some of them work. If you get 5 that work in a row and you've risked $2,000 per trade, you've passed. You don't even need 5, yeah. You need 4. You pass. But if you don't, and you get a winner, a loser, a winner, a loser, a winner, a loser, a winner, a loser, and you're using 1.25R return, you won't pass for weeks and it will drive you mad. And that's where they get you. So, and this is why a lot of them don't allow the usage of EAs as well, because they know damn well that if you leave an edge running long enough, it will play out. And human beings have this inability to be consistent by constantly getting annoyed. EAs don't. You stick it on a chart and you wait for the email to come in from the prop firm saying, congratulations, you've passed. You'll be like, really? Oh yeah, the EA did it. Because you're not looking at it, you're not involved in it. It's just following the edge that you've created, the edge that works sometimes. It's following that. And it goes, email arrives, I've passed. Fantastic. Email arrives, you've got $5,000 profit in your account. Would you like to withdraw? Yes. You failed your funded account. Restart. And it's all fully automated. So if you can find a prop firm that allows the use of EA automation, that will pay the mortgage. That will pay the mortgage. You won't make any money over that year, but that one, you'll pay the mortgage. Get 10 strategies across 10 different instruments and put them all together on 10 different prop accounts. At some point, just by luck, they will pay. It'll work. Coin flipping works, doesn't it? This is a 50-50 random distribution of trades over a period of 4 years. We started there, we lost, we won, we lost, we won, we lost, we won, we lost. We ended up 3K down over 4 years by flipping a coin. The next 4 years, if we'd have started the test here and ended it here, we'd be looking at the coin flip strategy going, holy crap, it's the holy grail. If we started the test here and ended it here with the coin flip strategy, we'd be proving it doesn't work. It's all to do with time when you start and what the market does when you start, not the strategy. Yeah, and that's what prop's about. ADR is all you need. You just need to find the right conditions for it. So I also have the stock index hedge, the Swiss Army knife set up to do ADR reversals. I haven't managed to test it yet because ADR is actually quite a complex calculation. And within EAs, you have to be able to turn on and off settings when things are hit. You've got to reset stuff every day. There's lots of stuff behind the scenes within ADR calculation and operation that you don't see, which is actually quite complex. So trying to get it into this EA is actually, it took me a good couple of hours. It's not a copy paste job. It's setting up variables, calculations, all sorts of stuff. So I've got it in there. I haven't tested it fully yet, but this EA will also allow us to test much more stop loss based strategies, and all the different exit strategies we covered. We can test all of those, including trailing stop, and with position trading. So I need a little bit of time to work on this, but I'm going to try to get this done by Friday, so that on Friday we can basically look at maybe expanding this into stop loss based strategies and find out what the best thing to do on prop with stop loss based strategies is. Yeah, I suspect using a trailing stop is what we're going to find is the most successful, but again, we'll find out, because we want to try and reduce that loss, don't we? To keep our drawdown low so that we can survive long enough to wait for the winning runs to arrive. So I'll do some testing on this, but it needs a bit of TLC. So much to get it working. So that's it really. Anybody got any questions on that? And obviously, if there's more you want to see on it, and you're watching the replay, comment or Discord. But if there's any other ideas on ADR you've got to try, we can run tests. But if you've got the Position Trader EA, or you want to download the demo of the Position Trader EA from the marketplace, it's all on the website. You can do your own testing. Yeah, so if it's tests that you've got an idea on, what if we did that, and it's using the Position Trader EA, go and test it yourself. And if you find you've got something, share it in the group. If it's something that you want to test that the Position Trader EA doesn't do, I can probably do it with this. So yeah, test away. But it's fairly straightforward, isn't it, prop? It was an interesting session. We'll give this a shot on the Euro US dollar. Yeah, test it on that. I'm just testing on the pound US dollar here, just because it's liquid. So it's going to work on liquid pairs, because liquid pairs have ADRs. US dollar crosses have ADRs a lot because it's the most moved instrument. So Aussie dollar, New Zealand dollar, you probably find ADR reversals don't work. So you got to pick this. You got to pick the instruments, yeah, for the strategy. And again, it's not going to work long term, and it's going to have periods where the instrument is just not going to suit it. So when you're testing, again, try and don't look for the equity curve. Look for the bubbles. Look for the drawdowns, and just go, those are fails. What's the relationship between passing and run up and failure? If I can run up long enough, you're going to milk it. You're milking the company while the strategy meets the criteria of the instrument. Yeah, that's all you're doing. Yeah, if you got the strategy that fits the instrument at the time you start, you take their money away from them. That's it. When it doesn't, you lose a small amount of money, which is the evaluation cost, which they will give you back as well, don't forget, when you pass, but only when you take your withdrawal out. So you've got to get passed and payday to get your evaluation money back. Yeah, that's the game. When I ran it over a long term, it wasn't great for me for prop. It's good, but it would have been cool to have something that you can run personally to... You didn't finish the conversation. That you can run personally to, do you mean? Yeah, but that's not what this session is. If you want to run ADR reversals normally, just run them. The set file that we put out in the members area works really well. I haven't tested it on any other pairs, but it works on the pound US, and it worked on the other one, didn't it? I don't know. I haven't done any detailed testing on it, but this is about prop and trying to find something to work for prop. That's what you asked for, AZ. Prop. That's what you got. Enjoyed the session. Cool. Open your eyes towards the prop approach. Yeah. Gambling. Not because I'm interested in prop, but grind some money out of my own account. Yeah. And again, I've got a session planned for this, which is one of the reasons I ran... I've introduced martingale into this. Yeah. So this, just as a quickie before we go, this is the test I just ran using a 50-50 coin flip. Okay. So we know we've got a losing run in there of 11 trades. If I turn on martingale, now that's not going to work because it doesn't use a stop. Let's try it though. So what was the average lot size? 0.18, 0.17. So let's go with, so this will give me roughly the same. Let's go with 0.15 as a lot size. So I'm going to run the same 50-50 coin flip test using martingale, right? So the result was we made roughly a $3,000-ish loss. Was it? Yeah, $3,000 loss with a $5,000 worth of drawdown and a 50% strike rate. So in theory, running this test will give us the same strike rate because we're not changing the criteria of the test. We're not saying we want a bigger TP, a bigger stop loss or anything. So the strike rate should come out at 49%, assuming it survives, which it didn't. Yeah. So this is the problem, martingale. Yeah, that's a stop out. That's a stop out. Made 121 grand before it died. Yeah, so we made an 88 grand loss because of... Right, see, now we've got consecutive losses of 22. Totally changed the consecutive losses on this. Why did that change then? See, our strike rate is the same, 49%. Why have we suddenly got consecutive losses different? Because we're using a different risk profile. So to get to the ADR target is going to take a different distance. Therefore, the trades are all going to be completely different. Yeah, we can't do that. Because martingale doesn't use a stop. Maybe I need to change that criteria. Yeah, I'm going to need to change that. Let me just quickly look at the trades on that. Let's see why it blew. So we should never have more than 2 trades on at once, which is right. Whoops. So how do we make a 32 grand loss? Oh yeah, look at the lot sizes. Right, so we did hit a bad run. So remember what I said earlier about doubling up, yeah? We got to the point, we started with a 0.15 lot, right? Here we're trading 153 lots. You will at some point. But if you're trading prop from here to here, who cares? These are all blows. All these drops are blows, obviously. But the strike rate's the same. Very different result. Where in the Posier can you change the EMA crossover settings from H1 to? You don't change that in the EA. It's the time frame you run it on. Yeah. So the EA trades on the time frame you run it on. So if you want to test a moving average cross on the hourly time frame, you do that. If you want to test a moving average cross on the 15, you test that. Yes, you time frame. Moving average is the same. It's just the time frame is different. We'll be testing over the week. Yeah, when you're not working. Cool. I've been watching this during a work meeting. Thankfully, no one asked me anything. They haven't asked you any questions. That's good. Get them to watch the replay. Actually, they'll have to sign up first, wouldn't they? Anyway, so there you go. So there you go. So that's ADR for prop. That's a big, long session. Right, I have to say, all these sessions that I was planning to be an hour, we haven't had one yet. So I'm trying really hard to just spend an hour a day in these to keep these concise. But if you look at all the replays, that's 2 hours, that's 148, 144, 148, 121, 221, 3 hours. Sorry about that. 150, 130, 130, 130. Yeah, we are not able to keep this down to an hour. So I don't want to sit here taking up all of your time, and people watching the replays are going to sit down and go, oh my God, 3 hours. So I want to try and get these shorter somehow. So I'm open to ideas, because the subjects that I'm covering obviously are not short, but I also want to come up with a way of covering the basics of everything really quick if I can. So I'm open to ideas on how you think I might be able to do that, because I'm trying and I'm not being able to do it. I'm talking too much. So we need to sort of figure out some way of getting the time on these down. US dollar CAD rejection is looking good, by the way, if you're short US dollar CAD. So we've got loads of indecision here, but I suspect the reason we've got this is because 1:30 this afternoon, we're going to either do that or that, aren't we? So I wouldn't read too much necessarily into this price action, because it's probably because of what's coming up in the news. You could do a 2 to 3 sessions a week instead of 5. Yeah, so that is something I'm considering, AZ. People said they wanted to have smaller bite-sized sessions more regularly, which I get. My problem is trying to shoehorn information into an hour is hard. Like today, we're just looking at one strategy. We've managed to spend nearly 2 hours talking about one strategy on prop. Well, it's a lot of back testing. It's good because we're seeing how the testing works and all that sort of stuff. But it's really hard to get it in an hour. So it's something that I'm considering as well, is moving over to just maybe 3 sessions a week. So what I might do is spend a big session in the general live room twice a week, and big sessions 3 times a week for members. Or maybe run a morning and an afternoon on the freebies for the new US guys as well, because a couple of the US guys have got in touch and said, why are you not doing streams anymore? So I just haven't got enough hours in the day. And everything I do is automated, so I don't need to spend any hours in front of the charts because it's all automatically executed for me. So, Jules, see, it's past my bedtime, 10:47 p.m. So short is sweet. Yeah, I mean, this isn't short though, is it? In my opinion. But if you watch the replays at twice the speed, as Linus has said, it takes half the time. But I talk pretty fast anyway. So can you actually understand what I'm saying? I don't know. Noob, I think it's actually good the way it is. You can find a simple summary of what each indicator does and how in every corner. The fact that you tell a lot is what makes the streams valuable. Yeah, but also it's obviously about time and people, some people don't want to spend their entire evening rewatching something. So I don't know. I need to have a think because it's hard trying to get the subject matter down. I constantly look at the clock, and every time I look at the clock and think, am I up to an hour yet? It's an hour and a half. So, unfortunately, this was my first session today, but I thought it was great. Not too long. Cool. That's good. Wait till you've been here for a week. It's hard to keep concise unless you have a hard cutoff at 10 where the stream ends and you pick up tomorrow where you left off. Yeah, that's also an option. But that also makes it very difficult for me to schedule streams. So what I also want to do is tell people what the streams are about, because people are going to come into ones that interest them rather than all of them. So if I say today we're going to start talking about X, and if we cover it, brilliant. If we don't, we'll cover it again tomorrow. And if it turns into a subject that needs 3 days, I'm sorry, we're not going to cover what you wanted until Tuesday next week. It becomes difficult for people to pick and choose what they want. But that is an option. We've run out of time today. We'll pick this up tomorrow. So yeah, that is an option as well. Yeah, I lose my flow though. That's the trouble. If I have to start again tomorrow, I've kind of got to rewatch what I said yesterday to figure out what I forgot to say. I don't know. That is an option. Of course, I understand that people who want to save some time. I just wanted to say there's also another point of view. Yeah, I know. This is the thing. It's you can't please everybody. As I learned when I started building EAs, they want that, they want that, they want that, they want that. You end up with something that does everything really badly. So I'm also conscious about, you know, you can't please everybody, unfortunately. So how about members stream 3 days a week in the AM and then free streams every day at 12? Yeah, could do that. That way the Americans can join too. The trouble is I've identified as well, AZ, is that the vast majority of what I do, you can't do in America. Which is why I've shifted to the mornings. And you know, my answer to the guys in America is why you're not streaming anymore. A, you can't position trade. B, because you can't get the leverage. Yeah. You can't get the leverage to position trade. Therefore, my main strategy is no use to you. B, my other main strategy, stock index hedge, you can't trade because there's no hedging in America. So the two main things that I do to make money out of the market, Americans can't do. So, you know, there might be Americans that are watching these replays, in which case it'd be great to have your input. But the problem is position trading and hedging aren't options for them most of the time. So this is why I decided to go European, Australia, New Zealand, UK. You are all able to watch streams in the mornings, and you can do everything that I do. So it's difficult. Again, can't please everybody. All the Americans want me to concentrate on futures, which is all right. Opening range breakout strategy, you can do futures. Oh, I just missed my target. Look, I'm going to I'll let it run. I got £100 free clear profit there. Take that. So I'm out the FTSE, 400 banked, 316 hedge on the DAX. So DAX I'm waiting to get to a decent move, which it might do on the CAD news this afternoon, never know. But guaranteed profit on the morning session so far. So yeah, I don't know. I'll have a think. But yeah, if you've got any ideas, this is looking good at the moment. Come on, CAD. Come on, the CAD. So yeah, it's. I just want to try and I don't want them to be too long. Yeah, is kind of what I'm saying. So we're basically 2 hours again, aren't we? I think breaking it up somewhat would be useful. Like today, you've streamed from 8 till 12, 8 to 11. That's 3 hours. Yeah, I don't mind putting in the hours. It's not a problem. But I'm conscious for other people. We have attention spans in learning. One of the things I used to do sales when I first left college. I went into sales jobs and I ended up working for a lot of blue chip companies like Panasonic and Yellow Pages, BT, a lot of big blue chip firms. Canon I worked for as well, Pitney Bowes. God, loads of blue chip firms I worked for. And one of the things that was drummed into me was when you're selling to someone, you have 15 minutes. When you're sitting in front of them, you got 15 minutes. After 15 minutes, if they haven't got it, you ain't getting it. And it's very much the same with learning and education. If I waffle on for 2 hours, after half an hour, you're drifting. Yeah. You might not know you're drifting, but you are drifting. Your attention span and your ability to retain information, your short-term memory retention is limited. Some people have longer ones, some people have shorter ones, but you will take in a certain amount of information and then go, not wanting to go, but you will, because your brain will just shut down because you can't take more in. Yeah. So you have that also. I have that in the back of my mind that, yeah, you're going to start turning off, not because you want to turn off, but because you physically can't. So some people might want to consume a single session in 2 sessions, in which case then they're always going to be one behind and playing catch up, which makes it harder to learn. So I do get the whole shutting at 10 o'clock thing. So I might look at, when I schedule streams, how long do I think this is going to take? But that is quite hard to do. So I'll think about that. I work in sales too at Revolut. So like Nirav, I work in a bank. You're in trouble, aren't you? I'm a bank trader, yeah. You're a bank trader. Yeah, Revolut, aren't they in trouble? Because they got so much fraud or something. It was on the news yesterday. They got a lot of fraud. More fraud than most, I think, is all it is, isn't it? Which is fixable. But yeah, there's a lot of Revolut in the news. I didn't realize how big they've grown. Huge. Very, very quick as well, isn't it? Expansion. Massive expansion. Mainly to do with forex exchange, isn't it? Currency exchange. Minimizing the cost of currency exchange, which is good. But yeah. So you work in a bank. Well, you might as well start your own course up because you've got a banking background. It's a Russian company, is it? I did not know that. Well, that would explain the fraud. I'm not Russianist, but they are mostly Russians. Organized crime. I didn't know that. So's MetaQuotes, MT4, MT5, Russian. Not Russian now, they've moved country, but they're Russians. Anyway, won't go down there because I might get Novichoked. Right, I'll be back tomorrow, same time. Moscow debt collection, yeah. Got to pay for a war somehow, haven't you? Yeah, so we're back tomorrow. Tomorrow we're going to look at hedging. I've got a slight problem at the moment in that I haven't got the EA built to do hedging testing, but worst case scenario, if we haven't got anything automated, we will do manual hedging with the position trader EA, and we will look at hedging theory to come up with some potential hedging strategies. Yeah, I've got some hedging strategies I know, I've tested. I haven't managed to make them long-term profitable. Short-term profitable, prop, yes. Long-term, not so much. So we'll look at hedging, how it works, and we'll look at the differences between hedging and stop-loss strategies, because a lot of hedging strategies use a martingale variation, which in theory you could just stop out and do the same thing without having a hedge on. So a lot of hedging strategies you see actually aren't hedging strategies. They're just martingales that don't shut the other side of the trade. So we'll look at all of that and look at it and see how it affects everything, how it works, and options. And then hopefully from there we can brainstorm some potential strategies to test and either prove or disprove. Don't get me wrong. There are a lot of strategies and a lot of people that hedge successfully, but it is quite very complex to do. So the reason I don't like it is because I've always found it a struggle. From an automation perspective, we can test models and prove them or disprove them, and if they work, we'll just roll them out. But I have never spent too much time doing it, so I'd kind of like to look into it as well. With hedging, I'd really like to see how timed exits affect it. We are locking in a hedge, same as this. I can tell you how timed exits affect it. I'm hedged. If I haven't got an exit opportunity by Y, I close it out. Yeah. What you're talking about with the market reverse alert hedging strategy isn't real hedging. That's not real hedging. That's just getting in both directions. Yeah, I call it the hedging set file because it has trades on in both directions at some point, but it's not designed and manufactured to try and get a hedge, to exit a hedge. It's not trying to exit a hedge. It's just basically playing mean reversion in both directions, and it doesn't matter which. It's not real hedging. I'm talking about real hedging, which is locking in profit, locking in loss, controlling loss until the desired outcome is achieved. Different thing. But we'll look at all of that tomorrow. Oh, you git. Just got out of the FTSE, and now it's going to target. Trading. Right. Back tomorrow. Have a good day. Any questions, leave in the comments if you're watching replay, or come into Discord, and we will go through that lot tomorrow. Have a good one, and I will see you guys next time.